Hi everyone. Let's take a look at problem 11-5A, which deals with some payroll transactions. And let me first say that I'm fighting a cold, so my voice is going to sound a little scratchy and a little different than my normal speaking voice. Okay, on January 8th, the end of the first weekly pay period of the year, Royal Company's payroll register showed that its employees earned $11,380 of office salaries and $32,920 of sales salaries. Withholdings from the employees' salaries included FICA, Social Security taxes at the rate of 6.2%, Medicare taxes at the rate of 1.45%, $6,340 of federal income taxes, $670 of medical insurance deductions, and $420 of union dues. No employees earned more than $7,000 in the first period. Okay, and then we're asked to calculate the FICA Social Security taxes payable and the FICA Medicare taxes payable and prepare the journal entries to record Royal Company's January 8th employee payroll expense and liabilities. Okay, so let's get started on the first requirement. First date is January 8th. And we'll make this year 20XX. Probably good enough. Okay, now we know we had office salaries expense of $11,380. Okay, and that was $11,380. Let me format this in dollars and cents. We also had sales salaries, and that was equal to $32,920. Okay, that's the total amount of the expenses we incurred. Now, we then have to calculate how many taxes that we owe to the taxing authorities. So let's first tackle the FICA tax on the Social Security taxes. Okay, let me indent that because that's an obligation that we owe to the taxing authority, so we will record it as a credit. Excuse me. So let's take the total amount of payroll, which is that dollar amount there, right? $44,300. Now let's multiply that times the 6.2% FICA Social Security tax amount, and that is the dollar amount of credit we need to show. Now let's tackle the next item. I'll just cut and paste here. And this would be the FICA for the Medicare portion. And again, we'll take the sum of those two dollar amounts of payroll. Then we're going to take that times the Medicare rate, which is 1.45%. Okay? And we've calculated that amount. Now, we also need to withhold the employee federal income taxes that we have withheld from the employees, and we need to get that to the proper taxing authorities. And that one they simply give us as, where's the dollar amount? $6,340. Then there's the employee medical insurance payable, and also the employee union dues payable, right? And these are just given right in the problem. It's $670 for the medical insurance. The union dues is $420, and that's the amount that we're going to withhold right from here to here. And the rest we have to fund, and that will come from our accrued excuse me again, our accrued payroll payable account. Okay, so to calculate that amount, I'll simply force it. So I'll take the sum of these amounts, right, and subtract off the sum of these amounts. If I did that, my debits and credits should equal, and we've completed the January 8th transaction. The only thing we have left to do is to document the purpose for the transaction, and then indent that to put it in proper form. Okay, now let's look at part 2. The second requirement wants us to prepare the journal entry to record the employer's payroll taxes associated with the information provided above in the entry that we just worked in the first requirement. They give us a little bit more information. Royal has a merit rating system for its state, so its state unemployment tax rate is 4% of the first $7,000 paid to each employee, and the federal unemployment tax rate is 0.8%. Let's tackle that. Let's slide up so we have a little bit more room. So again, our entry is going to be that January 8th of whatever year it happens to be. And we need to record the employer's payroll taxes expense. And normally these are lumped in one account. They aren't really separated for the purpose, though I have seen some companies that did break these into 2 accounts. Let's tackle the FICA on the Social Security. And you know what? Rather than type this, since the dollar amounts are exactly the same as above, why don't I just copy this here. Let me slide down so you can see what I'm doing. I've copied from above, and the exact same dollar amount, since it's half paid by the employer, half paid by the employee, will appear. Okay, so now all I've done is reference the cells from above. There's no reason to see the calculation. We've covered that in part 1. Then we also need to record the state unemployment taxes payable. And I'm going to copy that down and just change the first word. We need to record the federal unemployment taxes payable. Alright, so how would we calculate the state unemployment? Well, let's take the dollar amount of the payment, dollar amount of the payroll, right? Let me slide down so you all can see that. Okay, I'm working the formula right here. The state unemployment is at a rate of 4%, and it was told in the problem that no employee has earned enough wages where they've covered $7,000 in the first payroll period of the year. So that simplifies the calculation. Now, once we have that, we'll take that same sum from above. I'm going to slide down again. Oh, let me show you that what I have is the total payroll there. Let me hit the F2 key. Multiply that times the unemployment rate, which is I'll do it exactly the way it's given, 0.8, and you can put the percent sign in, and Excel will know how to deal with that correctly. Now again, what makes this easy is that none of the employees have achieved the first 7,000, so we've got a real easy calculation of the unemployment taxes to make. Alright, now that we know all the liabilities, or the employer's obligations, the offset is to payroll taxes expense. So we can simply sum our credits to calculate what that total amount is. We have one last thing to do, which is to document the purpose of this, and this would be to record the employer payroll taxes. For the period. Okay, and and that takes care of the second requirement. So we've worked the first,